Hello, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds to 9 o'clock, with news that has the feeling of being the calm before the storm. Firstly, American retail sales rose 6.4% in June from the same month a year ago. Car buying was back in favour compared with previous months, and it's bolstering expectations for decent economic growth in the June quarter. Still, the month-on-month June growth was only 0.3% compared with the May rise of 1.1%, so there was a moderating at the end of last quarter. The EU trade surplus in goods has fallen in May to €16.5 billion. Markets were expecting a surplus of €17.6 billion, so the trade results are starting to move faster than expected. In Canada, existing home sales were down almost 11% in June 2018 from the same month a year ago, although there are signs that they may be near their cyclical lows. New home sales were up, based on apartments in Toronto and Quebec, but the existing home market in Canada remains weak. House price gains have almost evaporated. Average house prices in Canada are now $560,000. And the OECD area employment rate, the share of working-age population with jobs, increased by 0.2 percentage point in the first quarter of 2018 to 68.2%, with gains in 28 out of 36 OECD countries. New Zealand is high on the comparative at 77.7%. China has reported 2018 second quarter growth pretty much in line with what markets are expecting. They say year on year their economy grew 6.7%, and that's 0.1% lower than the March quarter. There was better growth in their retail sector, however, with this up an impressive 9% in June compared with 8.5% in March. But industrial production was only up 6% in June, down from 6.8% in March. Fixed asset growth also slowed a little. Equity investors in Shanghai viewed the data skeptically, seeing the 6.7% rate as a 7-quarter low, and the Shanghai Stock Exchange Index dropped 0.6% yesterday, falling faster at the end of the session. Expectations are that China will now start to more aggressively stimulate its economy in the face of the trade war with the US and slowing growth at home. For all the good current data, views on the future are not so sanguine. The IMF says that rising tensions over international trade has already plateaued the global growth expansion that began roughly 2 years ago and has become less balanced. Even though they see growth at 3.9% worldwide, they warn that the risk of worse outcomes has increased, even for the near term. The IMF also says markets are complacent and they should be preparing for coming consequences. Bond prices are lower today, which means yields are up. US Treasury 10-year yield is at over 2.86%, up 3 basis points. The Chinese 10-year is at 3.51%, that's down 1 basis point overnight, while the New Zealand equivalent is now at 2.86%, down 2 basis points. Gold is weaker by $2 and now at $1,239 an ounce. And oil prices have fallen sharply and now just over $68 a barrel. That's a $3 drop in one day. The Brent benchmark is now just under $72 a barrel, a similar drop. And the Kiwi dollar is starting today a little firmer at 67.8 US cents. On the cross rates, we're also marginally firmer at 91.3 Aussie cents, and we're at 57.8 euro cents. That puts the TWI at 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.